Hey Kingland community, Big here. This video is a recap of a trade I took on MNQ near the New York Cash Open on January 29th, 2026. I'll explain my entire thought process, what I saw before the open, where and why I entered a position, along with how I managed it once I was in the position. As a side note, the screenshots I'll show were taken from my post in JD and Tyrant's stream of that morning as things played out. Let's first look at the PA prior to the cash open. This is on replay mode, and I have it queued up to 9:20 a.m., 10 minutes before the cash open. Just a look at the higher time frame. What do we see? We see a rally from the prior day's low to the London swing high up here, and now we're starting to sell off, and it's a strong and steady sell-off. So what does this curve suggest to me? It suggests a market maker sell model with the target of the overnight Asia low right around 085. Next, I want to take a closer look at the PA for the 2 hours prior to the cash open. So we're going to zoom in a little bit on this. Okay, I've got three important levels marked up. Okay, the 8 a.m. hourly high, the 8 a.m. hourly low that was printed at 8:19, and the previous day's EQ. That's my higher time frame POI. The thought is that what this PA is showing me is going to give me an indication as to which side is in control, either the bulls or the bears. So let's go through what I was thinking, what I saw. Okay, so we printed the 8 a.m. low. That low swept the prior low and a return to the range. We had a strong rally, okay, but that rally did not break this swing level. And then we saw a sell-off, okay, so that printed the 8 a.m. high. And it was a strong sell-off, right? Really quite strong. It swept the 8 a.m. low with a return back to the range. This is, so up till this point, it's looking quite bearish to me. In addition, that retrace after sweeping the 8 a.m. low, what happened? Tested the higher time frame POI, and it was rejected. The rejection swept this swing low right here. We didn't get continuation, a little bit of continuation, but we didn't sweep this low. We returned back to the range, okay? But all of this lower time frame analysis in conjunction with the higher time frame analysis that it's a market maker sell model leads me to believe that lower prices are going to happen sometime shortly after the New York Open. So first thing I want to do is, or what I did, was I marked out this range, the high to the low with a 50% fib, okay? That level is 173.00, and it's just above the higher time frame POI. So my initial thought was to short 173.00. Next, I want to show the first post that I made in the stream, okay, with that theory. There's the New York high, there's the New York low, my 50% fib. This fib is a newer one that I added 40%, 50%, and 60%. 40 and 60 are additions, because that to me is the range where I want to see a reversal. Meaning, not that I want to, meaning there's a high probability when my bias is bearish that a retrace after a sweep of a prior important level and a return to the range, the theory is that somewhere in between this 40% and this 60% level is going to be strong resistance, and we'll have a move down towards my liquidity level. That's the Asian low of 085, okay? So this is the post that I had. And I had my order set. I had my limit order resting, my short at 173 with my stop above this high right here, and my target down here at the Asia liquidity level. Next, what I decided to do was take a closer look at this series of up-close candles prior to the reversal, okay? And what did I see? Let's zoom in a little bit on this. I'm going to remove this fib. We've got two moves, right? We've got this first move that broke this swing level right here. Little retrace, retested that with a move higher, okay? So the thought is that one of these two moves, either this first one or this second one, is going to be strong resistance, okay? But I already have my 40 to 60% level somewhere around here. So I want to see within this structure what fits in line with that 40 to 60% level. Here's what I saw. I looked at this swing level right here, and we saw a break of structure with a strong imbalance there. So this is my important candle, my important up close prior to the reversal. Next, what I did was I marked up a 50% fib of that candle body's range, okay? And that's going to give me my higher time frame, or my important level. So instead of 170 that I originally have, I moved my important level to 175.50. Next, let's move forward on this and see what happens. We're still a few minutes before the cash open. Sweep lower, then a move higher, boom. Here's our 930 candle, okay? It did not test. It tested this high right here, but that high is in discount of the range that I was looking at, okay? So we had the reaction off of this level. It went lower and swept the prior low right here, but then there was a return to the range. The next minute candle, 931, tested my key level of 175.50. My stop loss is the top of that candle right there at 179.75, okay? Next, I want to show the post that I made after my entry, okay? Shows my entry. And actually, at this point, I had already, so I opened with 10 micros from my resting order at 175, and I took off 5 at this December high right here, right around 120. This post shows my final target that was the Asian low at 086 was about to be filled. Let's just see how it plays out. Boom. There's my final right there. And lastly, I want to show the trade stats. Okay, my entry was at 175. My stop was at 180. So I was risking 5 points on that. And my target was 086. That gives me a reward of 89 points. It's a 17-hour trade. I hope you found this video helpful in understanding how I frame trades at or near the New York Open.